Hello, traders. This is General Romulus coming to you, well, not live, in a recorded fashion from the Forum of Ancient Rome. Yes, Happy New Year. You guys do a weird calendar around here. We celebrated our New Year's months and months ago. Well, by now, you are well versed with the term FOMO, fear of missing out. Yes. By the way, before we go any further, this is General Romulus, and I am here hoping to help all of us get a little smarter when it comes to trading and investing. I'm not an advisor, stockbroker, nor am I dispensing any type of information to you that I am asking you to act on. This is for educational purposes only. Okay, so as I was mentioning, FOMO, whoa, that's right, silver. It is shining like it's gold lately, absolutely going through the gold-domed roof. And silver's not the only thing. Seems like all the metals, heavy metal and otherwise. By the way, when I used to visit the modern times from ancient Rome about 35 years ago, maybe a little bit longer, boy, I used to love some of these heavy metal groups. Metallica, yeah, that's right. Love them. Love them still. Anyway, so metals are going crazy. Gold is, you see a weekly chart right here. It is shining the way it hasn't, well, probably since my time 2,000 years ago when Octavius stole a whole truckload of the stuff to help him become emperor of Rome. Because even back then, politics was all about money, my friends. I've noticed things haven't changed. I don't remember too many times in stock market history for the last, let's say, 31 years during my career where people talked a lot about gold. As a matter of fact, 25 years ago, you could buy gold, and I do remember doing this, for less than $300 an ounce. And here it is, more than 10x that amount in 25 years. You know, they talk about stocks like NVIDIA. Well, when I started, they were talking about it was all the dot-com mania. Then a few years later, after that crash came and went, financial stocks and mortgage companies, those kinds of things. And then a couple of years after that, it was Chinese stocks and then solar stocks and marijuana stocks, and on they go. They all have similar patterns and ways that they kind of go about themselves in these markets. The patterns is what helps us understand the potential for what might be coming next. And gold isn't the only heavy metal that is exhibiting this type of behavior. Okay, well, the U.S. Mint, the U.S. Treasury, is no longer making the not-so-mighty penny any longer. It has been brushed aside. Why? Because it costs too much to make. It costs more than a penny to actually produce a penny. So it makes no sense. They got rid of it. But look at this. See, up until 1982, about 85% of all pennies were made of copper. 85% again of all pennies prior to 1982 were made of all copper. So here's a copper chart. Again, this is weekly. So you see a lot of big moves because we have a lot of data that we're showing over a period of time. This is dating back a couple of years here, 2 to 3 years. But here's copper. Copper is sitting at an all-time high today. Just hit it, right now. So it costs more to make a penny than a penny. But in 1982, up until then, 85% of all pennies were made of copper. From 1982 until now, it's only, far less. Maybe about 5% of every penny had copper in them. Again, they're no longer in circulation. Well, they're not making any new ones, rather. So they were made of tin, zinc, other metals mixed in there. It still costs more than a penny to make them. And with copper at new all-time highs right now, well, if you find a penny that's prior to 1982, I did a little back of the envelope, back of my shield math earlier today, and every penny prior to 1982 is worth about 3.1 cents. So that's pretty good. A triple of value right away. That's from the copper meltdown, by the way, not because it's a collectible. That's just the copper melt value of the coin. Again, 85%. All right, so we have a lot of metals. You see copper. We looked at gold hitting new all-time highs just a couple of weeks ago, not today, but a few weeks ago. Here is silver. This is a big talk of the town as well, hitting almost new all-time highs. If it closes up here, it'll be a new closing high in silver. And it goes up and down the entire heavy metal spectrum. We're seeing this across the board. Part of this is the rare earth storyline that has been circulating around the world for quite a while. Rare earth metals and minerals are different objects that manufacturers need to make things like computer chips and circuits and other sensitive technology hardware that are going into all the AI data centers and the space technologies and the weapons that are being manufactured, and on it goes. I mean, even in our cars, we're seeing a vast increase of chip technology going into car manufacturing, not even electric cars, just regular gas-powered. Electric cars have even more. So we have a big need for these heavy metals, not gold. It's not really much of an industrial use. It's still collecting, decorative, hoarding, safety. But silver, copper, platinum, palladium, certainly these metals go into and have a lot of industrial uses for them in the higher technology sectors and arenas. Now, so far, I haven't brought anything new to you. I mean, if you haven't heard about it, okay. But I haven't brought anything new out. You look back in silver, and let's bring even more information to the screen here, and it's trading in tight ranges for quite some time. Okay, the first price shock kicked in right here, April of 2024. So a little less than 2 years ago. Silver has just been a forgotten kind of wasteland of traders for decades. But it first pops over here, and it goes up quite a bit, all the way over here. So it goes from, let's see, this price, about just under 26 an ounce to 35 an ounce. Okay, so that's not a bad little move, and that takes place in 6 months, a little over 6 months' time. And in those 6 months, if traders buying the breakout made about 40% or so, that is, buying right at the breakout, selling at the highs, which, we only get to do once in our trading careers, but that was the move over here. Settles down, goes into another consolidative period of time. So this one, October 24, until a breakout right about in here, June of 25. So 7 or 8 months, about 8 months or so, it breaks out again. This time, that's a run. That gets a little steeper, doesn't it, than what we saw over here? And the gains, much more significant. So $36 an ounce on silver before really hitting a peak of $54 before it starts to settle back for the first time. So the first move was a 40% move before reaching a consolidated period. The second one was a 50% move. This consolidation right here, the third one, pretty shallow, pretty short-lived, wasn't it? Over here, October 25, breaks out again in November of 25. So it's about 1, 2, 3, about 6 weeks, and it breaks out again. This move, let's see, we got $56 an ounce, and all-time high looks like about 84, just under 84. So we'll do that one. That's another 50% move. That's good. I mean, really, in less than 2 years, traders and investors have made quite a bit of money in the silver space, quite a bit of money in gold as well. You see very similar type of moves in all of the metals, in all of them. Maybe not exact percentage returns, breaking out and consolidating at the exact time frames, but similar moves across the entire heavy metal spectrum. And here's where the FOMO kicks in. I mean, there's articles in the financial media, heck, mainstream media, not even financial media. I know people that are in media that are getting involved in gold investing, gold trading, that have admitted many, many times they don't know much at all about trading and investing, and yet they're getting involved. And we're reading stories, hearing things. This is when it kicks in. Oh, I got to have it. I got to get in there. I got to buy it. I got to be a part of it. I want it. The FOMO, right? The fear of missing out. What are you really afraid of, though? Making a couple of bucks in a gold trade? Is that your real fear? Because you want to brag about it at a cocktail party, or when spring breaks, you got something to talk about on the golf course? That's borderline ridiculous. I can tell you that I have no interest in buying gold up here. By the way, full disclosure, I don't own any gold. Right now, I have more crypto. And the reason I don't own any gold is because I don't chase things. I don't allow that FOMO to kick me in the head and then take me for a ride. Because you look at some of these pullbacks in gold. Here, let's look at silver, because that has been much more volatile. And this is where a lot of the talk has been coming in. 6% pullback that week. 13% here about 10 months ago. And just last week, an 8% fall. Really, it was 10% high to low, 11% high to low. And this could happen now at any given time. And this is what the FOMO can deliver to you, okay? We have a parabolic move, folks. That's what we're looking at here. Okay, what you're seeing now, again, still on the weekly charts, is the Chinese stock market. This was a parabolic move. Look at that. Boom! I want you to pay close attention to these squiggly little lines down here in the bottom. Back in ancient Rome, we didn't have the internet, and we had rudimentary maps. And this is one of my favorite rudimentary maps. It's an RSI indicator, helps us understand, well, where things are in terms of being very overbought or very oversold. Nothing foolproof. This is not either. No guarantees or 100% accuracy, but it does help. When the RSI 14 period, which is the one on the bottom, gets over 80, which it did a couple of times, what do we have? Pullbacks. All right. By the way, we're talking about an issue in a situation where I am not claiming that gold and silver and all the heavy metals are about to take a major correction and go through a major correction and get smashed like what did happen into the Chinese stocks that you're seeing. They got annihilated, or what happened to the dot-com mania after the early 2000 peak into late 2002. The dot-com crash resulted in an 89% pullback in the NASDAQ stock market itself. And it was just a total wipeout. No, I'm not calling for that at all. That could happen, but it's not on my radar. I'm just talking about how I've used something to great accuracy and has helped me over the decades avoid short-term pitfalls that eventually could morph into longer-term problems. All right, so this is the Chinese stock market, right? Okay, now you're looking at, boy, they don't have the data. It doesn't go back quite that far, but you're looking at solar stocks. They went parabolic. Trust me when I tell you the RSI was over 80 before this started correcting. And this index, this is a basket. This isn't even one individual stock. This is the grouping of them. Here it is, 2008, from almost, a little over $300 a share for the ETF. And then less than a year later, it drops all the way under 50. I mean, that's just a crushing result. Here's another example of popular marijuana stock during the marijuana parabolic bubble move in the fall of 2018 when Canada was talking about legalizing marijuana recreationally and medically across their entire country. And again, the RSI 14 was over 80 when Tilray and the entire marijuana universe was trading at these heights. So look at this stock, $2,800 a share, and all the way down here, $20. I mean, just a nightmare, okay? Absolute nightmare. The one thing that has just been a huge help to me is this RSI on the bottom. And whenever it gets over, 75, 80 on a weekly basis for anything, I don't care if it's stocks, commodities of any kind, bonds, crypto, it doesn't matter. Whenever this sucker is over 80, I'm not buying. Now, I'm not going to bet against gold, silver, copper, platinum. I'm not going to bet against the heavy metals. I'm not going to start shorting them right now because they pull back and there's a lot of interest, both retail and institutional, to try to get them going again. And the volatility is going up and the whipsaw nature could be heavy. But again, I don't own any right now. But if I owned some right now, I would be taking some profits and I'd be tightening up stop areas. And I sure as heck wouldn't buy any up here. FOMO or no, that's the point. I wouldn't do any buying up here at these levels. And if old General Romulus doesn't do anything else for you for the rest of your life other than what you just learned, then come on back to ancient Rome, get your own chariot, come pay a visit. We'll go out to the forum together. We'll enjoy a little entertainment at the circus, and you could say thanks. Because typically, when this happens, that happens. Well, hey, this has been General Romulus. Appreciate your time today. I'm always looking for consistent returns regardless of market direction. And if I can help you put together a little something like that, great. Any questions? You can contact me directly, romulusteaches@yahoo.com. Again, romulusteaches@yahoo.com. And there's one more thing I want to talk with you about. I saw this widely owned stock that is potentially, let me repeat, potentially on the verge of doing something that is not widely expected. Again, a widely owned stock that is on the verge of doing something that is not widely expected. Do me a favor, subscribe to this channel if you are not already, so you are notified when the next time old General Romulus pops up from ancient Rome to join you in the modern trading world. I'd appreciate that. Microsoft, one of the more prominent of the Magnificent Seven stocks, third most valuable publicly traded company on the planet behind NVIDIA and Apple. This looks like a double top over here for the traditional technicians in the world. This was something we highlighted back a while ago. And now it looks like it's ready for another leg down. Again, this is just a potential. This could reverse and stay in its trading range, which is where it is right now. It's in a trading range. But a market trading behavior below this yellow line could result in another leg down, again, not widely expected, in one of the most widely owned stocks out there. You see how it's been first trading below the 200-day moving average, right over here, and now in the last few days, this is the first time it's closed below it. That's the first close below the 200-day moving average since right after the April tariff lows where the entire market was rebounding. This could be significant. And the yellow line right here, perhaps serving as support where the stock could rebound and really serve as kind of a false breakdown. But if it does fall below, let's say 465, give or take, that could be a trip down to levels, maybe closing this gap all the way down here a little below $400 per share. Well, thank you for sticking around. I appreciate your time. Have an awesome day in the modern world. And I will be back from the forum, well, hopefully in the near term. That's all for now.